Well, as far as China is concerned, we think that the recent triple R cut is clearly an attempt to support the economy in an environment where domestic slowdown and the trade conflict is coming in together, and many of these pressures are unlikely to abate in the near term. We expect more liquidity easing. In fact, before the end of the year, sometime in December, we are factoring in another triple R cut. And the important point is that this recent triple R cut is all pervasive. It applies to all banks, unlike the previous ones which were selectively applied. And even the proceeds out of this liquidity injection can be deployed almost anywhere. There are no restrictions imposed on that count. So I think, this is clearly an attempt to support the economy. And, it also helps some of the banks which have excess liquidity at this point of time. Now, having said this, as far as broader Asian equities are concerned, I think we have to brace ourselves for weakening for a longer term, because many of the big issue is overseas US dollar liquidity crunch, and that's unlikely to abate anytime soon.
Yes, Manishi, it's interesting because, as you point out, these steps, the latest triple R cut is designed to inspire more confidence, but it's not having that effect on the equity markets, at least. I mean, we were just looking at the Chinese banks. Do you think there is a concern out there that now you're going to see authorities saying we've got to put some of these deleveraging efforts on hold, what that means for the banking sector down the road? Do you think this is an area of concern?
I think there could be some lingering concern on that front. But we don't think the Chinese authorities are likely to step away from the longer-term deleveraging targets. Deleveraging and the financial stabilization. These two are, at this point of time, the strongest targets that the Chinese authorities have. And we don't think they're likely to step away from these targets anytime soon. At the same time, there's a necessity to support the domestic economy, particularly the manufacturing side, and we have also seen incipient support to infrastructure, which might continue, because I don't think the authorities would likely to have anything close to disruptive dismantling at this point of time. But having said this, I think the market's concern about a slowdown is likely to linger on.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.